Just earlier this month, you have the Adobe CFO, Dan Durn, purchasing $500,000 worth of Adobe shares, around $390 per share. Earlier this year, he's not the only one buying, because Dave Ricks, a director, also the CEO of Eli Lilly, made a purchase of around $1 million worth of Adobe stock, around $440 per share. This follows Adobe being in the doghouse, down around 20% in the last year, near 52-week lows, and also trading around its lowest valuation in the past decade, under 20 times free cash flow. So in this video, we're going to talk about why it's been coming under pressure, predominantly from assessing the risk of AI, because this is clearly a trend that has been picking up steam. We're going to talk about one of the latest developments in AI in terms of image generation that might ultimately pose a threat, and trying to size up how much of an impact could this actually have on Adobe, thinking about it, and what does potentially management see with thinking about, buying shares around the current valuation. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. Let's dive right in to understand what are some of the latest developments going on with AI, because just earlier this week, you have ChatGPT announce their updated 4.0 image generation, which frankly, I believe is a step change. You could see, here's my personal image, and then you could see how AI, just with, sort of spitting it out a few seconds later, you get a Rick and Morty version, you get all sorts of different versions. It's never been easier to create new and interesting content, and that's going to impact all sorts of workflows, whether or not you're writing something or you want to make a small tweak to a picture. You can take multiple advertisements now and say, hey, I want this product to be advertised in this style. There's just tremendous potential. And, this AI revolution is very real, in my opinion. And so this does raise the question, could this be a death or real challenge for Adobe in the weeks and months ahead? So I think it is important to understand that Adobe really does have several different businesses within the Adobe brand. You have the document cloud that has grown at a nice clip from fiscal 21 to fiscal 24. You could see it was growing around 23%, around $3.5 billion in annualized recurring revenue. You have Creative Cloud that's been growing at around a 12% clip, so noticeably slower, going from around $10.3 to $14 billion as of fiscal 24. And then they have their Experience Cloud, also growing, around the same low teens level to around $5 billion. So just looking at these numbers, the figure that you're going to want to know the most about is obviously Creative Cloud, because that's the biggest out of this, let's say 20 billion plus in annualized recurring revenue. Then next is the Experience Cloud. And then lastly is the Document Cloud, as you're looking at these different pieces in terms of what's really driving Adobe. When you're looking at the Document Cloud, this is dedicated to digital documents and workflows. Think PDFs, editing, electronic signatures, and document management. This is using Adobe Acrobat and Acrobat Sign. And that's been a great cash cow for them, because they're addressing a pain point for businesses. Frankly, it's just amazing to me that it's a $3 billion plus business. Looking at Creative Cloud, this is focused on creating visual content. You can have graphic design, photography, video editing, and creative workflows. So Photoshop, Illustrator, Premiere Pro. This is, the most creative, hence the Creative Cloud aspect of their three different segments. And then the third, this is more around businesses. So that's the Experience Cloud. It's designed to manage and optimize customer experiences. So think marketing automation, web analytics for your website, e-commerce, and personalized customer journeys. This is using the products Adobe Analytics, Experience Manager, and Marketo, which they acquired from several years ago. So that's how you think about these different, pictures. There's a lot of different brands, a lot of different assets under the Adobe umbrella. So how are they trying to offset the risks of AI? Well, first, they're saying, look, we want to deeply integrate AI into all of our products, all of our solutions, and that will help, keep the customer retention, lower the risk of churn. The next aspect is agent orchestration, which is that if you not only have AI that can create images for you, but are deeply ingrained in the product. So that way, maybe it's about orchestrating a process. You're touching up a picture, then the AI prompt can say, oh, I can help you with that process. So you don't have to keep manually going through, let's say, a cleanup process. Another element is that they bring in multiple different models for image generation. So that way, maybe you don't just have to rely on one. Through one subscription, you can get access to multiple different models that have different strengths. Another key aspect is that you might, if you're creating content, particularly marketing content, you want to make sure you're not creating anything that could result in a lawsuit down the line where someone says, yay, you stole my content, you stole this image or this likeness. And so part of their value proposition with their AI and their data assets is that they will say, look, whether or not you're a business or an individual, we will verify, we will tell you that this is data and this image generation, you don't need to worry about it from a content perspective, from an IP perspective. And then for a lot of businesses, they might like sleeping a little bit better at night, knowing that it got that sort of clean bill of health versus, let's say, using another model that might be either cheaper or just more, uncensored versus, let's say, accessing Adobe. That said, this doesn't stop, competitors and graphic design software, Canva, they've been doing quite well. And you could see their growth has been amazing, around 220 million monthly users. And they recently reported that they've helped create over 25 billion designs. This is across startups, teachers to Fortune 500 companies. So that Fortune 500 companies, that's sort of a dagger at Adobe saying, yeah, we're coming for the big boys. And this is ultimately the key threat with that you have. And, one of the books that I'd recommend you read or think about is Innovator's Dilemma, Clay Christensen, which is that you can have a solution that starts off as sort of addressing the lower tier needs. Maybe it doesn't address the needs of the professional. And then you slowly go up market as people go, well, it's so cheap and it doesn't cost that much and it just meets the needs that I need. Maybe the super professional, they're not going to enjoy it. And I think you have someone like Canva where inch by inch, you start off with graphic design that doesn't have all the polish of Adobe, but every month they get a little bit better. Every month they add new features and you're going to get more and more competition. And so I think you are seeing that very real risk to Adobe, and the growth speaks for itself. This growth chart, I'd argue, is like Adobe in the early days. And when you see competitors growing like this, and they talk about annualized revenue of $2.5 billion growing at tens of percent, I think the growth rate maybe 30-40%. Seventh year profitability is also another key signature, so a key data point. So you have very strong growth, growing faster than Adobe. That's a red flag. When you see competitors growing much faster, then you're going, wait a second, why? What's their right to win that they're taking market share or expanding faster than Adobe? And could that mean that in time, you play out those growth curves, Adobe grows at, let's say, 10%, Canva and others growing at 20% plus, doesn't take long for you to sort of intercept. And then you say, oh, okay, someone moved your cheese. So that's a key aspect. Another key aspect of this announcement from Canva is that they talked about profitability. And so if you're talking about profitability, you're also talking about self-financing. So that means that growth, that path, that innovation is sustainable. So that's another key risk. This isn't just venture capped financing. That's driving this. This is, it becomes a self-reinforcing competitive threat. So what are my thoughts when we look at Adobe? Because normally I love seeing insider buying. As always, this is not financial advice. Also, quick plug, recently Matthew, a premium member of the Unrivaled Investing community, shared the following: Netflix, Spotify, and Unrivaled are the only subscriptions I'll never cancel. Seriously, this is an incredible value. You've helped me and my wife comfortably take away time from work to travel and had the financial confidence to start a business of my own. This follows Santosh, who said this was one of the best investment decisions I've ever made. He talked about subscribing to Unrivaled Investing. If you're looking for compelling ideas, come check us out. By the way, the premium tier will be going up in price later this May. At the end of May, the premium tier will be going up. So thinking about Adobe, I think it is important to recognize a bunch of different assets. Their documents, that's probably pretty well insulated so far. At least that's what the data would suggest. Their Experience Cloud, also doing quite well. And Experience Cloud, I'd say, this is around $5 billion in ARR. This is, less immediately threatened by the AI revolution. Businesses will still need solutions for marketing automation, web analytics, e-commerce, and that doesn't mean they can let down their guard. They're definitely going to need to, keep up, stay competitive in this field. But I'd say the existential threat from AI being able to quickly generate an image, and then you can share the image and say, tweak this, having AI quickly disrupt your creative solutions, that is more existential versus some of their other products, less so. So when I think about the threat to Adobe, I'd probably say 60 to 70% of Adobe does face this more existential threat very soon. I would say in the next 2-3 years, you could start really seeing the numbers flow through. We will see. But another key aspect for investors to consider is that it's hard to see what the exact number is. But clearly, when you're looking at their customer groups, a huge percentage of their customers are professionals. And when you're looking at professionals, outside of belt tightening, where you say, hey, I'll consider the lower cost solution, when you're talking with professionals that have to do the graphic design or the video editing, or maybe they're making the slides for a company, what they're going to say is, I want the best tools that's available to me within a reasonable budget. And so in that case, Adobe is the gold standard. And, their data points suggest that they're, for the most part, used by these creative and marketing professionals, and that the consumer piece, which I'd argue is more susceptible to that sort of freemium offerings of the Canvas of the world, that, does suggest that they will continue to have a strong or high retention. But over time, it does become a more competitive marketplace, and there is more disruption that I think investors need to be aware of. So I do like this, this aspect of the creative and marketing professionals being thoroughly entrenched using Adobe, the gold standard. When I run it through my own personal checklist, really the key challenge that I have is the threat of disruption is real. I would say, as I already called out, at least 50% of the business has this sort of existential threat where customers are going to say, really, is this really worth paying, let's say $100 a month for the Creative Cloud suite when, maybe I could get it for a fraction of that price? That said, why are the insiders buying at, let's say, under 20 times free cash flow? I think it comes down to this belief where they're saying, we're making all these initiatives. There will always be a demand for a gold standard. And at 20 times or under free cash flow, that implies that if they take their free cash flow and just return it to you each year, whether or not that's via dividends or buybacks, that's the equivalent at 20 times free cash flow. And it's under that. That's equivalent to around a 5% free cash flow yield to shareholders. And if you say, I still believe that Adobe will keep growing, and that this is, I think, the insider perspective, that it'll keep growing at, let's say, a minimum of 5% per year going forward. Price hikes, new features, deep AI integration, the gold standard, entrenched customers, that 5% a year, then you're talking about 5% to shareholders plus that 5% sort of organic growth. Then you're talking about a 10% sort of minimum return before any sort of change in valuation. So I could understand why some of these insiders that clearly want to believe the story are buying it, because they're saying, yeah, they believe at least 5% growth, I imagine. If they didn't believe in 5% growth, I don't think they would be buying the stock. And so they're saying, I'm getting the equivalent of a roughly 10% type of return, hypothetically. Of course, stock price can go way higher, way lower. But they're saying at that price, you're getting a minimum of 10%. That's how they're thinking about it. Personally, it's too tough for me. I would rather find something that has less of that existential risk, where it's very clear, like, hey, in the next 5 years, I think it's greater than 50% chance that you're much, much larger. With Adobe, I have much less of that. I don't think I could say it with 50% conviction that you'll be, 30% larger or 50% larger in the future. There's a real chance the Creative Cloud could start to see an uptick in churn, maybe, even if you have a recession or something like that. And I do not want to make a bet that these AI tools are going to get dumber in the future. I want to make a bet that they're going to continue to get smarter and smarter, just like OpenAI revealed earlier this week. So I think too hard for me. I can understand why the insiders are buying it and have made some sizable purchases. And I'd love to hear your comments in below. So if you have some thoughts, would love to hear it. Thanks so much for watching Unrivaled Investing.